If you are like most investors, you're probably wondering where the next Nvidia is. Maybe you feel like you missed the entire AI boom. And every time you open YouTube, CNBC, people are talking over and over again about the same stocks that already doubled, tripled, or even gone up tenfold. But what if I tell you that you're completely wrong and looking in the wrong direction? So most people believe the biggest money will be made by buying AI companies, and I don't. I believe the biggest opportunity isn't AI itself, it's the industry that AI simply cannot exist without. Because every AI model, every data center, every autonomous vehicle, every robot needs one thing: massive amount of electricity. And that's why I believe energy, and especially nuclear energy, could become one of the biggest investment opportunities of the next decade. In this video, I'll explain you why this trend is getting started, and I share 5 companies with a dive into the charts that are crucial. Why everybody is looking at the wrong place. Everybody's looking for AI stocks or quantum computing. Both technologies need each other. And my personal belief is that AI and quantum computing haven't even reached 5 or 10% of its full potential for the next years. So about that, we're gonna talk in a different video. But there's one more important or crucial part or industry that's needed to make AI stocks keep growing. Energy. Without energy, AI stocks and quantum computing are not able to grow and reach its full potential. AI is not the only part of the story. Think about everything that becomes electric, like electric vehicles, heat pumps, cloud computing, industrial automation, autonomous robots, massive data centers, cryptocurrency mining. Each of these trends is growing on its own. But together, they are creating an explosion in electricity demand. And that's what makes energy a very, very interesting investment. The problem: to really get the scale of this opportunity, you first have to understand the sheer magnitude of the problem. For decades, electricity demand in developed countries was pretty much flat. AI has completely changed the game. Data centers are the new factories of the 21st century, and they are starting to consume an almost unbelievable amount of electricity. In 2022, US data centers used about 2.5% of the country's total electricity. But according to the International Energy Agency, global data centers' electricity use could more than double by 2026, reaching over 1,000 terawatt hours. And to put that into perspective, that's more electricity than the entire country of Japan is using today. That's freaking huge. The solution. The solution is pretty simple. We just need to produce more energy. Sounds easy, right? But it isn't. That's where nuclear energy comes into the picture. Honestly, nuclear energy has a really bad reputation, but it's a totally false narrative. Modern nuclear energy is one of the safest, cleanest, and most reliable sources of energy, producing massive amount of power 24/7 with virtually no carbon emissions during operations. The investment. There are coming different companies into the picture that can deliver all that worldwide, not only in the United States. What we need is safe uranium production, existing reactors to level up, build new nuclear reactors or small modular reactors, etc., etc. And the companies that I have in mind are: number 1, Constellation Energy, CEG; number 2, Cameco, CCJ; Number 3, Oklo. Number 4 is NuScale. And number 5 is BWX technology. And at the end of the video, I give you a bonus ETF to start off. So let's dive into the chart, guys, and let's go. We're in the charts, and we're gonna start off right away with CEG, the established leader. Before I go into the facts about this company, I want to make something clear. I'm in the weekly chart right now on purpose because I'm gonna treat those investments like long-term investments. So I want to hold them for at least 1 year, in the best case 2 or 3 years. So anyway, if I get a chance to take a momentum move, go out, and then go in again out of a correction phase, I would prefer this, but want to stay constantly in the market, just going out real quick for cashing in and going in again. But for you guys, the best way is to just buy it for long term. If you want to buy it, it's not an investment advice, it's just a idea. So let's go into CEG. CEG is the largest producer of carbon-free nuclear electricity in the United States. That's point number one. Point number two is they already owns and operates large fleet of nuclear reactors and generating strong cash flow today. That's pretty nice. They're the leader. So they're well positioned to benefit from long-term electricity demand from AI data centers or hyperscalers. And it's low risk way to gain exposure to nuclear investment theme. So this is a low risk version. And yeah, let's look into the chart. Okay, we got a little pullback right now, a little correction phase. I didn't bought really good, but it doesn't matter for me. It's a long-term investment. But right now we are at a strong, strong support level over here at $238. For me, it's a really good level. If you dive deeper, that's not a good sign. But anyway, it's gonna be the leader. It's gonna make me money. So if the market is gonna turn around on this level here, what it looks like right now in the daily chart, but we're gonna stay right now on the weekly chart. I'm gonna buy more shares, 50 more, to get a better average price. Basically, for the $1 million challenge, I don't have all the stocks, but for my other accounts and my managed account, I'm gonna have basically everyone except one, but we go into this later. So right now, let's go over to Cameco CCJ. So right now we are into Cameco. That's the uranium leader. They're one of the world's largest and high quality uranium producers. Benefits directly from rising uranium demand as more reactors are built or restarted. And long-term contracts provide stability while maintaining exposure to higher uranium prices. It's a cornerstone holding for investors seeking uranium exposure. So they're really, really nice stock here, uranium leader. Cameco, we're gonna see they had a really, really nice push since April 2025 from $50 up to $180 more or less. They made $130 in a quick move over here till January 2026. This is not even a year, so $130 is pretty nice. Right now, they're a little bit in a correction phase. It might be they're dipping a little bit lower, but anyway, this is a really, really good stock that I want to buy for the $1 million challenge too. This stock I'm gonna have in my other accounts already. Not the best price, but at around about $140, 141-ish dollars. So that's a really important one. And right now, let's go to the next one, BWX Technologies, ticker symbol is BWXT. BWXT, let's go into this. Here we are. Um, that's a really, really nice stock too. That's a hidden infrastructure winner for me, in my opinion. They, it builds nuclear reactors, components, and fuel systems for defense and commercial customers. Diversified business model with strong government relationship. That's very, very important, government relationship. So they have contracts even done, and it benefits from long-term investment in nuclear infrastructure rather than uranium prices alone. So it's about nuclear infrastructure. And often this stock is overlooked compared with more popular nuclear stocks, but it's a big, big, nice one. Just to keep that in mind, BWX Technologies, and it's a really good one. So right now on the chart, we had also a big move since April 2025 over here from 85 bucks up to 240 bucks. They tripled the value barely, so it's really nice. They're also in a correction phase right now. I'm about to buy them. I wait if they dip under the $183 level. In my other accounts, I have this stock for around about $170. Also not a best price right now, but it's long term, so keep that in mind. And it has a really, really high potential. So if it's turning around, going to the all-time highs again over here, 240, a lift above the all-time levels, and then the there's no limit up there because it's a really, really nice one. So let's go into Oklo. That's one that I personally don't have in no account still, but they're becoming really, really interesting. Um, Oklo is the high growth SMR opportunity. So they're focused on advanced small modular reactors, SMRs. They target AI data centers and industrial customers requiring reliable power. So that's really important too. And well, it's a higher risk due to its early stages because it's an early stage company, but potentially very, very large upsides if execution succeeds. And it's suitable for for investors comfortable with higher volatility. So if you're comfortable with higher volatility, there's a good stock for you, but with a really high upside potential. High risk, but high upside potential. So if you hold it long term, it's a really, really nice play, but please don't buy the stock for short term for 1, 2, or 3 months. But we already saw that the stock has potential. It came up over here from April to from 15, 16 bucks more or less up here to round about barely 195 bucks. So the potential is there. Right now they're correcting because the fundamentals are still not good. It's a pretty new one on the market, and right now they're correcting. That's not a good sign. We are right now at the $46 level. This stock I still don't have, but I want to have it for sure, in my personal opinion. So keep in mind that's not an investment advice, it's just ideas. I don't want to tell you buy this and later it doesn't work out. And you know what I mean. It's just an idea. Do your own research if you want the stock. So for me, it's pretty interesting around this level. If you take a turnaround at this level at $46, perfect. If you did more, I'm gonna buy it because I'm gonna hold it. This one I'm gonna hold for 3, 4 years for sure. So, and right now, let's go to NuScale Power SMR. SMR, hold on, we just gonna switch over. Yeah, it's a little bit crashed too. It doesn't look so sexy right now, but don't let fool yourself. I'm here in with the $1 million challenge too. You can already see it, but we go to the chart later. Let's play out a very important part. It's the pure SMR play. So small modular reactors play. One of the first publicly traded companies decided to small modular reactors technology. Have large addressable market if SMR becomes widely adopted, and I think SMRs, small modular reactors, becoming largely adaptive, especially for companies like Microsoft or like Meta, whatever, that they build their own small reactors. So there are a lot of companies where is a demand. So even if we don't get the big reactors done quickly, and well, they're highly speculative, but offers a significant long-term upside potential. But keep in mind, highly speculative. And success depends on commercial execution and industry adoption. So that's I think. So if SMRs becoming more popular, they're gonna benefit big time. Big time. I'm not in with the best price. Let's see the chart. They had also their push over here, also April 2025 from around about $11 up to the top over here, $57. That means more than 6 times the original value, but it dropped a lot. So I'm pretty excited to get it down here. I'm just waiting to get more stocks here to get a better average price. I'm totally into the stock for long term because there's high potential. So, and right now, let's go to the bonus one. It's just an ETF. So, how long we gonna go in it? NLR. Here we are. It's the VanEck Uranium and Nuclear ETF. So you have a ETF that combines different companies in it. That's the first step for dipping the toes into the water of nuclear and uranium market. So I have it already. Not the best price again, but I'm not worried at all. So that's really good ETF that combines many companies, and it's a really successful stock. We see already here from once again April 2025 from $66 to its all-time highs at around about barely $170, $165, and right now it's in a correction phase. Doesn't look so good. The support level here, 125, is not holding, but also here, if we dive deeper, I'm gonna buy more shares to get a better average price. It doesn't look sexy right now, but at this level, $97, it's a pretty safe play. Okay, don't you know what I mean with safe? It's a pretty good play, and let's see how it plays out. But it's a very good one to just start off with uranium and nuclear. So, guys, that's from the charts. So let's go back to the video. So, what can we take away from all of this, guys? Every major technological revolution has created a hidden investment opportunity. The internet needed fiber optics, cloud computing needed semiconductors, and today AI needs one thing more than anything else: reliable energy. That's why I believe that we are still in the early stages of one of the biggest long-term investment trends for the next decade. Does it mean that every nuclear stock is going to be a winner? Of course not. So that's why it's so important to focus on high quality companies with strong fundamentals and attractive chart setups instead of just chasing a hype. And as always, guys, do your own research, manage your risk, and never ever invest based on a single YouTube video. My goal is giving you ideas and help you to identify major trends before they become obvious for everybody else. So if you enjoyed the video, make sure that you subscribe. I would like it a lot. And remember, the biggest fortunes aren't made by following the crowd. They are made by recognizing tomorrow's opportunities before they become today's headlines, guys. Thanks for watching. Peace out. Sascha.